Well, the UK consumer prices seem to have come down to an annual rate of 2% in May, matching expectations. How are the markets reading the numbers?
Yeah, hi, Chimmy. So as you said there, a fall in transport costs and cheaper clothing is thought to have ended the recent rise in inflation that threatened to push the Bank of England and them into maybe bringing down interest rates. Energy costs, which spiked in April, and a price war in the car industry following a slump in sales over the past year, also helped to bring down the consumer prices index from 2.1% in April, that down to 2% in May. Transport costs fell by 3.8% overall between April and May this year, led by falling airfares, and we've obviously heard a lot about that and how airlines and travel companies are struggling at the moment. The Bank of England policymakers will be meeting tomorrow to judge the health of the economy and decide whether it is overheating and in need of higher interest rates to cool it down. Taking a look at the equities market then, and all of the indices are down by a sort of remarkably similar amount, actually. The all share is down 0.23%, the FTSE 100 down 0.22%, and the FTSE 250 down 0.23%. Looking at the pound, things are looking slightly better for sterling. It is up on the dollar 0.21%, up very slightly on the euro by 0.11%, and up a few points also on the Japanese yen.
Okay, let's look at what President Donald Trump has been tweeting lately. He has hinted his willingness for an extended meeting with Chinese President Xi Jinping at next week's G20 summit. Are the London markets hopeful that a resolution will be reached this time?
Yeah, finally looks like China and the United States are about to rekindle trade talks ahead of a meeting next week between Donald Trump and Xi Jinping. And the financial markets are loving this after weeks and months of bickering between the two countries and tariffs being slapped on each other's goods. Now, finally, there are hopes that an escalating trade war between the two countries may slow down or even end. Trump on Twitter, as he so often writes, said, had a very good telephone conversation with President Xi of China. We will be having an extended meeting next week at the G20 in Japan. Our respective teams will begin talks prior to our meeting. The UK's FTSE 100 climbed 1.5% on that news. And yes, the markets, investors and traders will all be hoping some kind of progress can be made there and the months of uncertainty will come to an end.
All right, Simon, a quick one just before I let you go. There's this developing story, if you could flesh it up for us. The story on British Airways owner IAG signing a letter of intent to order 200 of Boeing's grounded 737 MAX jet planes.
Yeah, so this is a big story here. The International Airlines Group, IAG, and Boeing, the airliner, have signed a letter of intent, as you said, for the 200 B737 MAX aircraft. This is the one with all the controversy that have been grounded for months. It's a big boost for the manufacturer's single-aisle jet. Subject to formal agreement, the mix of B737 and B737 MAX 10 aircraft would be delivered between 2023 and 2027, and that would be operated by IAG member carriers, including Vueling and Level, as well as adding to British Airways Gatwick fleet. Boeing's MAX aircraft are currently on the floor. That's across the world. They are grounded after those crashes, those two fatal crashes involving the jets a few months ago. But announcing the agreement, IAG's Willie Walsh said that the group had every confidence in Boeing and expect that the aircraft will make a successful return to service in the coming months, having received approval from the regulators. The deal would be worth around $24 billion at list prices, although IAG said that it had negotiated a substantial discount on that. Their share price today is down 2.69% on that news.
All right, Simon, the Bank of England will be meeting tomorrow, so let's keep an eye on that. Thank you. And stocks in Asia rose today following positive developments overnight on the US-China trade front. Mainland Chinese stocks gained on the day as the Shanghai Composite rose 0.96%, while the Shenzhen Composite added 1.47%. Hong Kong's Hang Seng Index also jumped 2.35% as of its final hour of trading. Over in South Korea, the Kospi rose 1.24% to close at 2,124 points. Australia's ASX 200 also gained 1.19%. In Japan, the Nikkei 225 jumped to 1.72%. And the U.S. stock index futures were marginally higher this morning as investors wait to hear from Federal Reserve Chairman Jerome Powell. At around 6 a.m. Eastern Time, Dow futures indicated a positive open of nearly 20 points. Futures on the S&P 500 and Nasdaq were both slightly higher. There's a special focus on the outcome of the Federal Reserve meeting today. Not only are traders keen to understand the chances of rate cuts this year, but they are also interested to know if President Donald Trump has any influence on the central bank. There are no data items to note for the day. And away from the equities market, back here on the African continent, a Kenyan parliamentary committee has recommended nationalizing Kenya Airways as part of an effort to turn around the loss-making airline. The Transport, Public Works and Housing Committee also proposed setting up an aviation holding company with 4 subsidiaries, one of which would run Kenya Airways, which is 48.9% owned by the state and 7.8% by Air France KLM. Under the proposal, which still need to be debated and voted on by Parliament, another arm of the holding company would operate Nairobi's main international airport. The cabinet backed a plan last year to hand over management of Nairobi's profitable Jomo Kenyatta International Airport to Kenya Airways to boost the airline's balance sheet and help it buy new planes, but the plan was later shelved. Well, we'll take a break now, and when we come back, we'll look at that story about Tanzania bringing out a tax hit on hair extensions. So stay with us.